Welcome to another Founder Wisdom Pod with Sumit Shazad with us today. He's co-founder and CEO at OTO, aka Auto. Forbes Asia 30 under 30 has a bunch of ventures under his belt. So seasoned founders right there. Going to talk mostly about fintech and about everything that he built so far and the lessons learned along the way. This pod is presented to you by podpire.com. If you want to start, scale, be invited, or monetize a podcast, create funnels out of them, and just create an ever green ATM money printing machine. That was a long word, but that's what podcasts do for me. They present me with cool people like Sumit. They have me spread the word about my brands and myself. They grow my neurons cell, and yeah, it's just a fantastic mechanism. It checks all my ikigai boxes. So podbuyer.com if you want to do something similar. Sumit, welcome to the pod. Tell me a bit more about yourself and about Auto.
Thanks, As, for having me here and sharing my views and thoughts with you. I'm right now a co-founder and CEO at Auto. I built two more ventures before starting Auto. So I graduated from IIT Bombay in 2012. And since my third year of college, I've been an entrepreneur. So never did a job in my life. Started building venture very early in the career. Fortunate enough, have done two more before this, and both have kind of seen a good scale, and one of them made a good exit for myself as well. So I built an edtech startup in 2011 when I was in college days. I tried to build a platform which can bring the courses of premier institute like IIT Bombay to the larger user base who could not make it to the premier institute. So the platform that works on low internet, quickly on mobile, and can give access to good quality education to other students, tier 3 college students in India, was something that I built. Got a chance to demonstrate to entrepreneurs in US when they were in for a conference in India. They loved it, and they gave us an offer to join hands together and build it at larger scale. So that's been my first one. Start from Mumbai. The venture that acquired us was based out of Mountain View, California. Had a great start of the career, 14 months straight, built multiple versions of the product, launched it across global, not just in India, but in UK and US as well. And that gave me a great exposure. And the learnings that I had out of the startup kind of motivated me to do my next one. So in India, I built the largest marketplace for pre-owned two-wheelers. So again, just for the audience to give more clarity, India literally run on two-wheelers, right? We have more than 140 million two-wheelers on the streets compared to only 25 million four-wheelers. So two-wheeler is the major personal mobility transport. Every second house in India has a two-wheeler. So what I vision to build a marketplace which can help in selling and buying pre-owned two-wheelers in a more trusted manner. And frankly, I used to own a two-wheeler for myself when I was bootstrapping my first venture. So that's what kind of intrigued me. I had a pretty broken experience when I thought of buying a second-hand bike for myself, and that's what kind of motivated, intrigued me to solve this large problem market in India. Raised $25 million of equity in this company, got Fidelity, Omidyar, Yamaha to invest over time in this company, scaled up from 3 founders to a team of 300 people. And then with the learnings that I had at Credar and the skill that we achieved, got me into my third venture, which is Auto, which I'm running currently since 5 years, where we are two co-founders, and today we have raised more than $20 million of equity here. We have scaled up massively. We have more than 500 plus team members. We have sold more than 80,000 two-wheelers through the platform and financed more than 60,000 of them. So that's been the journey so far at Auto. What we are doing interesting is we are building a digital distribution platform which is finance first. So typically, when you buy a new two-wheeler or a new automobile, financing is definitely very important problem to solve. And we start from there. We enable our consumers to get a lease-like EMI option in the country, and then on the top of it we give you home trials and an digital way to discover and buy and finance your vehicle. So it's a 10x better way of doing it than what it has been happening in our country so far. So we digitize the complete discovery, the complete buying experience and financing, and over time it becomes an ecosystem play, because you also come back and sell to us again. So you discover a vehicle through us, buy it through us, and then after 2 years or 3 years you can come back to upgrade with us. So we play a kind of a life cycle management platform role for the two-wheeler customers in the country, and excitingly building it since last 5 years.
Right. So let's say I'm in India, I want to buy a scooter. You give me some kind of loan, right? And I can save up on the total amount that I would have to pay on day one, and you're 30% cheaper than the competition.
Yes, yes, yes.
That's pretty good
Yeah.
because the market of two-wheelers is humongous in India, right? Like it's definitely a big market. How much loans do you provide a day?
So we are doing roughly 5,000 bookings a month now. Which translates roughly into almost like a $5 million of monthly disbursal of loan. We have roughly disbursed more than $85 million so far in last 4 years of operations. So just to add, what we bring different is that because we built a pre-owned two-wheeler marketplace, we have built a proprietary model at Auto where we are able to commit you an assured buyback value and hence our EMIs are 30% lower than the bank, because unlike banks which are not underwriting this asset class, they want you to pay the whole amount in 2 years or 3 years. We enable consumer to pay only fraction of value in the first 2 or 3 years, and then you can keep upgrading after 2 years or 3 years with Auto. So it builds a perpetual subscription kind of model, like what iPhones have done in US. That kind of product has never happened in India, and we're the first one to launch it. And today, still after 5 years, we're the only one who provides this kind of product in the market. So that's a big win for us, and we have been able to kind of scale it pretty well in last 4 years of time.
5 million a month. So that's pretty impressive. How much back do you get in terms of loans? Like what's your cash flow that you get back on a monthly basis?
So generally the tenures are roughly 28 months. So 2.5 years is the average tenure for a loan. So essentially and the average ticket size of a loan is around $1,200 to be safe. $1,200, $1,200 is the average ticket of loan. So on a monthly basis, consumers pay $45 a month. So compared to $65 that a bank asks you are paying only $45 to Auto, and that's what becomes affordable for the consumers in India.
Right. Okay. So $45 a month. And what's your delinquency rate? Like how much people do not pay back these?
Yeah. So for us, one of the great thing has been that our delinquency rate is just 40% of the market today. We have delinquency of less than 2%, while the industry delinquency for two-wheeler in India has been like north of 5%. So and that's why today most of the lenders in the country wants to work with us. We have multiple banks and NBFCs who are partnering with Auto to make sure that they can leverage our digital distribution as well as the digital lending tech stack, which has been able to deliver one of the best quality of portfolio in India, as they want to also build their books in two-wheeler business. So that has been one of the great, I think, milestone and achievement for us, that while we have been able scaling 2 to 3x every year, we are able to manage a very good portfolio quality, and that speaks for us.
It's very impressive. Who is funding all of that? Is it private investors at the bank? Like, where did you get like that cash to fund all these loans?
Yeah. So what we've done, Charles, interesting is that building the balance sheet model generally becomes a killing switch by itself, because then you have to keep raising your own equity money. What we done differently is that we have kept ourselves asset light. So from day one, we'll manage the full life cycle. So origination of acquiring a customer, underwriting it, getting the monthly EMIs, everything is done by Auto. But the balance sheet risk and the balance sheet is built by the lending partner. So we have banks and NBFCs at the back. So we have banks like Suryoday Small Finance Bank is one of the big bank in India. There's a NBFC known as Northern Arc. They're pretty big in India. So just to take name, these are two. There are 6, 7 such partners with Auto, who essentially are investing in financing for the consumers. And Auto manage the complete life cycle. So for them, it's a zero CAC, zero operation model, where they invest a certain money and get a kind of a certain assured return, because Auto is managing the book for them. So win-win for both, because we want to acquire consumers and serve them in a digital fashion, while they want to build the book, and hence it works as a great partnership for both.
Right. That's pretty interesting. The algorithm to choose if someone is a fit or not for the actual loan, who built it, and what are the components of that algorithm?
Yeah, so that's what is Auto's proprietary. So my co-founder Harsh is a CTO and a strong data science guy. So what we've built here, Charles, again, is a very interesting on-the-fly underwriting model, where we essentially leverage some of the alternate data sets that we have, or that a consumer has on the mobile, and we use certain set of bureau data sets to kind of understand the past credit history. And we essentially build a 3-score mechanism. So there is a credit score. So if a consumer has facilitated any loan in past, what has been his history of repayments, that's what we use. Second is we build a social score based on his employment status, based on his locality of stay, based on the which kind of house it's a rented owned house. There are 8 to 10 parameters. We build a social score to understand what kind of risk a customer carries for us. And third, we use alternate data on his phone sets and his bank statements to build a financial score, that what kind of EMIs he can afford to pay on a monthly basis. And a combination of these 3 deep scores of credit, social, and financial profiling gives the final output for our lenders, that whether this customer should be financed or not. Second, what should be the rate of interest for this customer, considering the risk bucket of the consumer. The rate of interest could vary from 8% to 12%. So what should be the rate of interest for this consumer? And third, what should be the EMI? So what should be the tenure, so that the EMIs are what something one can afford. So this engine works beautifully on the fly. As a consumer, it takes 3 minutes to fill the application of Auto, and within few seconds, he will get an answer from Auto, whether he will get a loan, and if he'll get a loan, what is the rate of interest and what is the tenure. At the back end, our engine is a superset. So we are integrated with multiple partners at the back, and our engine on a synchronous basis is able to figure out at which lender will suit for this consumer, and hence the financing will go through. So pretty much the tech stack is owned by Auto, and because we manage the collections, so on a quarterly basis, we are able to rework on our algorithm and models based on how the collection is performing, so that this model kinds of keep evolving and data just gets stronger and stronger.
Interesting. You've built multiple fintech startups. If you compare this one with the others, why are you going with this one? Why do you think that one will grow faster and stronger?
I think, Charles, what interesting I have observed in this market, especially in India, is that most of the fintechs or ideas that has come across are more around distribution, and underwriting is something that is still relies heavily in the hands of the lenders, right? So the majority of the fintech players are building unsecured lending model, right? It's a personal loan, right? I will give a money to you based on what I like the customer not, and hence everyone is playing more on a distribution play. What I like strong about our model is that there is an underlying asset, and the company or the player who can underwrite this asset better will be able to build a much better and a stronger product innovation for the consumers, and also a better product for the lenders, right? So I think the ability this secure asset class provides, that you can build a proprietary underwriting model around this asset, and which tomorrow can be scaled to other asset classes as well, makes it very interesting. Second is, because there is an asset involved, it also gives access to you or opportunity you to build distribution, right? Because when you give money, consumer is free to buy anything. But here, because you're giving money to buy a two-wheeler, which means that you can also sell a two-wheeler, right? Because you are giving a money, you can also build a distribution. Hey, I'm giving the money. Why don't you just use my platform to try and buy another vehicle? So I think the heavy ability to have an asset at the back end gives you to cross-sell multiple services to the customer at the same point, which is loans, which is two-wheelers, vehicle itself, which could be insurance, which could be other services related to the two-wheeler, can be packaged and sold across. So you are able to serve consumer for a longer time and able to extract value for yourself as well. So that's what makes this asset-backed fintech much more an interesting play for us than just a unsecured fintech model.
Interesting. And what's your plan to scale that one? More capital, more loans? Like, what are your top three priorities for the rest of this year and the next?
Yeah, so obviously, I think for us, three things always remain the thing. So one is demand. We are today in 10 cities across India. Can we scale it to another 20, 25 cities? How do you go about expansion of this market from, let's say, the tier 1 cities to tier 2, tier 3? How do you want to expand further into India across cities? So I think geographic expansion remains one. Second is partnership with brands. Now we have a decent scale, and today, fortunately, every brand wants to work and collaborate with us. So how you can build innovative and more strong offering with your brand partners like Ola Electric, which is a leading EV player, or it could be Hero MotoCorp, which is a leading player in the two-wheeler space in the country. What more services you can launch for a customer so that your platform becomes a go-to platform for the consumer. Third is supply, definitely more partnership with the lending partners. That today you have banks. Can you get a public sector bank? Can you get a commercial bank so that your cost of fund can go down? Because if your cost of fund can go down, your product will become more and more competitive in the market. So I think these three remains the priority for us today: expansion, geography, partnership with brands to build better and innovative services for the consumer on the platform, and third, partnership with larger banks so that my cost of fund can go down and I can become more competitive in the market.
Right. I want to talk also about the challenges of such a business. It's not always easy, right? It's quite hard to build fintechs, whether it's a regulatory aspect or minimizing the fraud or the delinquency rate. So what are the challenges have you faced so far, and how have you resolved these?
Yeah. So I think very true, as you said, Charles. Giving money is easy, but when you give money for a specific purpose, then the regulatory challenge comes that you have to track that purpose, right? So essentially, if you are giving money to buy a two-wheeler, which means that I cannot just put money in the accounts of my customer and be relaxed. I have to make sure that the money is given to the dealer or a distributor of two-wheeler, right? So which means that the operational complexity adds upon that every time a consumer buys a vehicle from any distributor, that distributor needs to be registered with us. So his KYC and his account has to be linked to my account so that I can put money in his bank. So I think that adds to a certain level of operational complexity, which is not there if you are just giving a money to someone. So that's one of the operational complexity that we have worked over time. What we've done is we have built an API. We have built a registry, what we call as a dealer KYC, dealer registry model, where today we have more than 700 plus dealers registered in our ecosystem, so that when any lender wants to put money, he doesn't need to do registration every time. He can just hit our API and he can get the registry details to immediately make the payment to our dealer. So I think that, but that's something that doesn't need to be done if it's an unsecured financing product, right? So that's one of the complexity we have. Second complexity or a challenge comes is when you buy an automobile, it doesn't come just under lending, but it also comes under your road transport ministry, right? So every vehicle needs to be registered, every vehicle needs to be insured. So there are additional layers of regulatory clearance that you have to make, and you need to make sure that those are followed when the vehicle is sold to the customer and the vehicle comes on the street, right? So essentially that adds on to some level of operational complexity, because these are certain things which are in India unfortunately still offline. So you don't have so your lending is digital, but your registration of two-wheeler automobile is offline. So that piece still has to run in an offline manner, and you cannot be 100% paperless or digital here. So I think you have to manage those things in certain offline processes, and SOPs has to be set and checks has to be put in place so that your customers are complied to all the regulatory measures that are needed in this business.
Right. And where do you see AI coming in inside your business? How can you integrate it to better the workflow there?
So I think that's I think talk of the town, and every organization is trying how to use AI in certain manner. For us, definitely we see a clear use case. One is on the underwriting side. Today, for example, when you get content, when you evaluate a consumer, you get data sets from multiple channels, and then someone has to kind of extract and summarize and create a summary of it to evaluate or take a decision. And I think you have automation channel to get data from three sides, but someone has to collate it then. I guess and what we think and excited about is that AI can actually solve it, right? Where the whole summarization can happen once the models are trained well on your underwriting side. The whole kind of triangulation of data from multiple sources and scoring mechanism can give you answer instantly, and you don't need to rely too much on a human resource to do it. So I think that's a one area where we see a lot of use of AI. Second is content, right? When it comes to automobile, your users generally consume a lot of content to before they think or make a decision to buy a vehicle, right? And we are leveraging AI a lot on flushing out content which is important and relevant to our customers. And with the help of AI, we can do it at a much better pace, and a content could be much more relevant than what it was day before, like yesterday, right? So your content could be visual, it could be audio visual. It is very much to the relevance what a consumer needs. I think that's a second specific area where because it increases my top of funnel, because more the content I have and more relevant content, engaging content I have, more consumers are going to engage on the platform, and hence I'll get a better returns on my CACs, the marketing dollars. So I think these are the two specific spaces we already started using in, which will bring efficiency in my marketing, and second, efficiency in my underwriting of my customers.
What's your philosophy on loans? How do you leverage loans yourself as a human being to get wealthier?
So I think you have certain arbitrages that definitely can play for yourself. So philosophically, if we talk about, there are certain asset class where you are, where banks have comfort and they can give you money at a lower cost of fund. And there are certain areas and opportunities as a retail investor, as an individual, you can better off for your returns to create wealth over time. So I think that is a interesting arbitrage to be played upon. But yes, one has to be very cautious about and conscious about the kind of leverage you are playing, because over leverage is overkill. So I think that's something there. My overall philosophy is to rely less on debt, use debt only for things which has a long term uh, wealth creation for you as an individual. For example, education loan makes sense because the education will help you in getting a better job opportunity, or being an entrepreneur, which will give you returns multiple 100x better in the next 10 years. So I think any kind of loans is a debt and it's a liability. Any liability should be done in a careful manner, and should be done only when you can see a long-term wealth creation having been created out of it. I think some of the overkill has happened in the last few times in crypto space, where people trying to take over leverage upon to create quick bucks, and it has actually shown the good face to everyone. So I think one has to be really careful whenever they have any kind of exposure to liabilities.
Think like if they buy the bike to deliver food, for example, or to go to work, that can be a nice ROI, or simply
Yes.
if it does bring happiness to them. Um, I just think, yeah, in India, need to be careful on the roads. There's a lot of accidents, and yeah, your precious bike can knock you off, and you can hang in a hospital bed for 3 months while paying a loan of a bike you
True.
didn't had before. So what if that happens to your customer? Like it's not a very frequent situation, but it does happen. What if that happens?
So, Charles, that's a very good point. And Charles, coincidentally, this month only we launched a hospital insurance product for our customer, so that exactly the same scenario. Because obviously, two wheeler is more dangerous than four wheelers, because considering it has two wheels and you have to have the right balance to run it across, and that's why the accident frequency is higher than the four wheelers in India. For two wheelers, what we brought in is an initiative where we have partnered for an insurance product where at least if you get hospitalized because of any accident, your 3 months EMI will be covered through this insurance product. So so that you any kind of such unforeseen circumstance doesn't create a financial burden on you, and at the same time my lenders doesn't kind of feel a pressure on themselves. So I think this is something we just launched this month. The first few loans have been started getting covered, because we also realized that this is something is unfortunate and no one foresees it, and if it comes it should not kind of become a burden on anyone. And the simply the insurance, and it's a very creative insurance, it just costs like $2. So it's not a big cost, it's a $2 cost a year, and that gives you that kind of a comfortable coverage. So that's something that we have just brought in. So pretty much to the point.
Where can people find out more about you, Sumit, and Auto?
Yeah. So people obviously, I think, get to know us a lot through, as I said, two-wheeler is a very engaged community. People search about it, people go through content about it. And today, good thing about auto is we have a very unique concept. Whether the EMI is the 30% lower EMI and flexibility that we gave, or the digital way to sitting at a home, you can get a home trial and buy a bike, has never happened in India before. So a lot of influencers talk about us, a lot of celebrities talk about us. So we get a lot of endorsements from for the unique experience that we have created for them. And so the content and influencer strategy helps a lot in getting customer to know about us. Second is obviously been fortunate to be part of certain podcasts who have been able to recognize our innovation and then bring us out. And when these podcasts and these kind of coverage by media publications goes out, definitely it brings a lot of eyeballs, and if you're able to serve these customers right, they get you more customer. Third is referral. For us, referral works a lot, because two-wheeler purchase is a big purchase for Indian customers, and if you have given a great experience to one, he will definitely come back for the another, or he will make sure that his family and friends get to know about you. So I think these three channels works perfect for us.
That was Sumit Shazad and Charles Cormier as your hosts for another CEO Wisdom Podcast.com.